session. We do this every week. I am your host, Steve Strazza. I'm the director of research here at All Star Charts. We're going to jump right in and talk about all the bullish developments that really began late last week. We've been waiting for it. We've been talking about it. We've been looking for it. We're finally getting it. That much needed rotation. And then we'll dive into some new names from some new groups. Not really the same trades that we've been leaning on all year because of what we're seeing rotationally, and that we'll talk about in the macro part of this video. So before we dive in, nothing we discuss here constitutes any solicitation to buy or sell any security, solely for informational purposes and not to be construed as investment advice. For more on our disclaimer, visit allstarcharts.com/terms. Small caps. All the talk since last week. And for good reason, right? This is the Russell 2000. This is the ETF, the iShares fund, IWM. We've zoomed way in. So we're really just looking at the price structure of, this year. Not only are we making multi-month highs, highest level since March, right? But this was Friday session. It's the big candle on the first candle that's circled here in green. It was the best single day performance from small caps, measured by the Russell. The 1-day rate of change shown in the lower pane, best day since November. Now, in isolation, maybe that's not a super big deal, right? And definitely not without confirmation. But first of all, look at where it's happening. Right? Key level, short-term resistance here, blew through it with this, big momentum surge day. You see the gap up above this little, this is an inverse head and shoulders, right? Short-term reversal pattern. And blasted right through the 200-day moving average and the anchored VWAP shown here in blue from the year-to-date highs. So not bad. Then pulled back a little bit Monday. The black candle here, pretty much a classic retest, right? And you expect that retest to be quick because this is a short-term pattern. And so you got it literally day one after the pattern breakout, and then follow through today. And now we could look and say two of the best days since November, right? Yesterday was too. And then more follow through today. So small caps really getting it done here. I think it's a big deal. When we zoom out, we have to consider while tech and growth and the leadership groups were doing what they were doing, trending really well all year, with broad strength, if you look at something like the NASDAQ 100 or another growth index or large cap tech, these levels held in the weakest groups. Russell 2000, right? So your small cap index and then financials. We're really looking to the prior cycle highs here as that, big line in the sand in these lagging groups, and it held. Now, over the trailing 5 days, small caps up 5%, tech flat. So while we're getting, this rotation into small caps, into things like materials, you see XLB here of 4%. Sorry, this chart's so small. While we're getting that rotation, tech is flat. It's not really even correcting through price. It's correcting through time. Really constructive. If you look at some of these charts, which we will in a minute, right? So today was actually, this past week, and this week is shaping up to be, so I'm talking about the trailing 5 days and now this week, one of the largest, or widest performance gaps between small caps, so IWM up here, and XLK in the past several years. So not only are we getting this momentum thrust on a short-term basis and a little short-term pattern breakout in the Russell 2000, suggesting, important to point out, we're probably heading back to these year-to-date highs towards 200, right? So we're getting that momentum thrust on an absolute basis from small caps. They're coming off a, really key level. We're getting a momentum surge on a relative basis, right? Outperforming right now the market leaders. Tend to see that at turning points. And if you look to other, lagging groups, I think ARK's a really good example of speculative tech, as you guys know. We're going for 8 straight up days. I know we've just turned red here today, but we were higher this morning. Actually, it was a nice move this morning, and now we're down about 20 basis points. So if this candle closes green today, we're not far from 8 straight up days would be the first time since summer of 2021. Right, so we're seeing these really, momentum-y, thrusty signals from the groups that we've been pointing to and saying they kind of got to get it together, pick it up here, start participating. Tech's going to need a breather. Who's going to pick up the slack if and when that happens? Well, tech and growth really carried things long and for as long and for as far as they could this year. Those groups, now they get that breather, and the areas that we need to see those rotational tailwinds and carry things higher while tech breathes are doing the right things now too. So some really bullish developments. I don't think we could ask for much more as stock market bulls, this week and really starting Friday. So here's what Apple looks like. This is what I mean. These things have come a long way. From sideways wouldn't be bad. Wouldn't be bad at all. Makes sense. Meta, 7 consecutive up months. For as good as this stock has been for the past 10 years, never seen that kind of a run. And I know there's all this good news. AI, metaverse, virtual reality goggles. But are we at like peak AI maybe in the near term? Everybody loves this. Everybody's in. Everybody's a buyer. I mean, you guys know I am. But we got to be realistic. The market's going to run up, price these things in, and do it pretty efficiently, usually. Then maybe, some sideways. If tech stocks went sideways for the next quarter or two, would that be so bad? Here's NVIDIA, up 3x, almost 4x since last year. They've earned it, right? Is the point. Those other groups now, it's their time. So here's what that relative trend between small cap stocks and large cap stocks looks like. This is the exact same level where it bottomed back in 2020, right? Right back to the scene of the crime after the COVID crash. And then whoop. Probably wouldn't be a bad thing for the broader market. These small caps catch a bid here, not just on absolute terms, but relative to large caps. Nice little momentum divergence. Maybe it's the start of something. Couldn't think of a better place for it to happen. Versus mega cap growth, same thing. Depending on what small cap fund or index you use in the numerator and what growth index you use in the denominator, you'll see something similar with large cap tech and other techie and growthy indexes, right? Small caps at a very logical level versus not just large caps, but versus technology and growth to start outperforming, start showing some leadership. How about industrials? Let's remove small caps from the equation. This is large cap industrials versus large cap tech. Doesn't look, too different from the other ratios. That's because there's a lot of industrials in small caps, right? There's a lot of value in small caps. Industrials, this is the value trade, cyclical trade, right back there at these former lows, very logical level. Start seeing some outperformance from industrials. So we're looking at, value groups like industrials, financials, materials, small cap stocks pretty much across the board, even speculative growth to start participating. I think there's going to be some really good opportunities there. Play a catch-up trade from the worst groups. How would we do that? We're going to talk about it. We're going to play it through the strongest names. Okay, so they might be the weakest groups, but we're still buying the leaders, the strongest names in those groups. If those indexes or those sectors that have been lagging start to catch a bid and outperform, the leaders are probably going to lead that surge higher, right? Internationally, I just have to mention this. I think it's a really big development. Europe kind of kicked off the rally around the globe, right? Not all regions of the world have been great. Asia hasn't been. Japan finally got it together. Looks really good now, but wasn't always the case. And the rest of Asia is kind of struggling, really been struggling. True for most emerging markets, but this is EM ex China, removing China from the equation. It's a lot like those nice bases we've been buying. So internationally, things continue to improve. Everything is constructive overseas. Let's look at our favorite setups right now. So what do we focus on for this week? Small caps, mid caps, and then mostly value and cyclical groups, right? Enough large cap tech, enough large cap growth. This is Vertiv Holdings, VRT. We were long this one, I think, through follow the flow report a few weeks ago. Already hit that first target, popped up now on our hot corner list. This one looks great. So, first target hit around 2070. Let it cool down a little bit, but the way this is consolidating real high and tight up here, after that first target's hit, the base breakout's already done. You got the 200-day moving average now sloping higher. The trend is up. You can buy strength, on a move above this little coil here. And that does happen like right around 20, which is our old target, new floor, and a new target of, call it 2850. So we'll talk about what each one of these is, because there is a theme here. So this, despite being technically a tech stock, it's electronic technology. Equipment, it's a $7 billion stock. So mid cap fits that theme. Ecolab, ECL, another nice base. These are what the charts should look like, right? So this one, while it is a $49 billion company, it's a chemicals company, right? So that's that materials trade. 200-day flattening. Let's start curling higher here. This one's a buy on strength setup still. We are up about 1% today. Still trading around 175. We want it on strength above 177. Got those August highs here. We love to define our risk at the August highs. And target, at least first price target, 198. And we'll reassess once we get there, but why not? A secondary of 239. Fluence Energy, FLNC. So this is a electrical products company, 4.7 billion. Another mid cap. Big base here. FLNC hasn't been around that long. Looks like a SPAC. This is what SPACs look like. Nothing. So 2650 is the level. Above there, back to the all-time highs, about 3950. FLNC. These are all new setups, also, except for two at the end. Two at the end that we just have to reiterate because they're so good. Confluent, CFLT, Altimeter Capital is in this one. Boy, do these guys know what they're doing. Superstars when it comes to the hedge funds of tech or Silicon Valley. So 10 billion is the market cap in this one. So listen, still in mid cap. Really, we consider mid caps all the way up to 30. Most stocks are pretty big, at least the ones that we talk about here. Mid caps, there's just not enough mid caps, right? So we kind of like widen that range internally. We talk about mid caps like they're anything from really 4 to 30, and then small caps as if they're 1 to 4 billion. So anyway, this is a mid cap to us, just over that $10 billion mark. 34 is that level, right? Again, you guys know it by now. August highs, 200-day flattening, starting to curl. Look at that, hugely overbought momentum reading 84. Boy, you don't see that. You don't see that every day. So 34, target 4650. This is my favorite chart today. I was just saying to Alfonso, how have I not seen this one? Oof. This is pretty. And look at the breakout. If you want, I encourage you to zoom in on this chart, a daily chart on your own. Homework. Up the past 5 straight days, right? Just every candle is perfect, and the body is higher than the next one. It's building on each other every day. Follow through, and look at where that kind of price action is taking place. Prior cycle highs. Such a clean level. You got 6 years. Polarity here. Key price memory at these former peaks. And price is just, relentless since last week. Up every day, up another 1.7% today. We call that a decisive upside resolution. Guess what else? Momentum's getting overbought. Checks all the boxes. PGT Innovations, the building materials company, and I just had to pull up the relative trend. Should have included it. Breaking out of a monster base on a relative basis as well. So a lot to like about PGTI. This is my favorite. You know, not supposed to pick favorites. This is my favorite of the day. Not afraid to say it. 1.6 billion market cap, small cap stock, building products. Yeah, 2650, target 3850. Wellington Management. We love our friends over at Wellington Management. Old Wellington friend will be on the morning show Friday. Can't wait. Surprise. So Ares Capital Management, this is an asset manager, 16 billion. So whatever, fits both of those themes. Mid cap-ish stock to us, and it's in the financial space. And you know, a lot of people, I'm getting a lot of people reaching out since last week. You know, there's been a little bit of strength in the banks. What bank should I buy? What bank should I buy? I don't think that's the move. I don't think that's the strategy, right? I get it. Financials, a lot of them, the whole sector really attractive, especially from valuation standpoint. Held a key level, right? If we do get that rotation that it looks like we're getting, that's a group that should work, and we will be looking to for opportunities. But why not buy the leaders, right? You know, there's some broker dealers and exchanges that come to mind. There are some good-looking charts in financials. Not a lot of good-looking charts, but some good-looking charts. Why not buy the ones that already, you know, look strong? I really think that's the move. This is one of them. You know, Ares breaking out of a massive base here. The stock looks great. Really a secular leader too. All the stock does is go up. Like I said, 16 billion financials, the value trades, the mid cap trade. You got a clean level here at 90 and a quarter. We're above there, which just about we're at 89, 90. So right there. Let's see where we close today. Target 113. Have you guys heard that we like home builders? Right? Home builders, still hot. This is Taylor Morrison Home Corporation. 5 billion market cap. The CFO was the buyer in this one. $250,000. Not nothing. Last September. Kind of a good time to buy home builders. What a purchase this was. September 15th was right here. Wow. Yeah. This guy bought the bottom. We'll have to check what his cost basis was. This was a great purchase. So anyway, Taylor Morrison Home Corporation then went on to break out from this base, hit our first target. And listen, this one's not giving investors much of a chance to get in. A target's hit, called 4150-ish. Now we're accelerating to the upside again, already above 46. The risk reward is still there. You do want it as close to 4142 as possible, though. So this one is as strong as it gets in the home builder space, and home builders are as strong as it gets in the entire market. I just pulled up a little charting platform here. I just pulled up a relative trend of Taylor Morrison homes versus home builders. This thing has been just surging higher. It's pressing to its highest level since like 2014. So everything is there. The relative trend, absolute trend, really nice chart, clear level there. Get in, do it. CarMax, KMX, president and CEO was the insider here. Love to see the CEO almost as much as the CFO. And it's a clean base. What don't I like about this one? Yep, that's right. The 200-day still kind of sloping lower. Want to see that overbought reading for confirmation. Did get oversold recently. Don't love that. So look, this one might need more time. Don't rush into it. 7850 is the level though. 7850, target 106. Beacon Roofing. This is not a new name. We've talked about this one plenty since last year. And why? Because look, the base has looked good for a long time. It's just hasn't gone. And this is what I mean by buy the leaders, right? If we get that rotation into this kind of a stock, which is building materials, I believe, Beacon, wholesale distributors of building materials, 4.5 billion market cap, right? So that mid cap space, it's finally going. Really looks like it's finally going. So a couple things we're looking for here. Overbought reading and momentum, we're there. Price has been surging up again today. Right at above 70 now today. We were at 67 just yesterday. So as close as you can get it to 66, that's the move. That'll give you the best risk reward. We want to use that as our out too, right? Because that's the 2018 highs. Don't really want to be long this if we fall back into this range. But above 66, this is as good as it gets. 99.50 is target one. And one more, I'm about to go on with my dear friend and options market aficionado, Sean McLaughlin, at 3 o'clock. I think we're doing, options trade of the week. And we're going to be talking about GXO. I hope I didn't spoiler alert. Yeah, so GXO, talking about with Sean in about an hour and a half. CEO is the Form 4 filer in this one, just back in November. So another good time to be buying. This is a logistics company, mid-cap logistics, breaking out. Already broke out. 54.50 was that level. This one looks a lot like DraftKings, which, by the way, is working great. Looks a lot like DraftKings with the real clean base breakout above the August highs. Classic throwback, right? Textbook retest here of this 54.50 level. And now back off to the races. So GXO, it's not too late to get in. I think we're trading around 60 today. Let's check real quick. Yeah, 59, 60 bucks today. So as long as we're above 54.50, we could buy weakness back towards there. It's the year-to-date highs. It's the August highs. It's also the IPO day lows back here. IPO week lows. So 54.50 target 77.50. Really nice base, right? This is exactly what we want the charts we're buying to look like right now. All right. So guys, that is it. That's all I got for today. I did not check the chat. Let me check the YouTube chat quick. As you know, you can always reach us. Guys, it's also the allstarcharts.com IPO. Oops. Nothing in the chat. Just Joe. Thanks, Joe. So everybody, see you tomorrow. Hopefully see you at the morning show, 8 o'clock or 8:30 every day, 8:30 to 10. I'll be right back here on Stock Market TV with Sean in about an hour and a half. Everybody have a great day.